Hey guys, hope you're doing well today. Just wanted to talk about Palantir as it had a very large move today to the downside on a downgrade by JP Morgan. So the price closed at around $23 or so. That was after hours, but the actual closing price was around $22.50. So if we look at Friday's expected move, if we combine the $22.50 calls and puts to form a straddle, we see that the expected move is around $2.20 in either direction. So upside by Friday in the next couple of days would be 24.70 and downside would be around $20.30. So keep this in mind when you're making your trades for the week ahead, right? Until Friday, right? December 4th expiration, obviously. Now, if we go out to next week's expiration, and keep in mind IV's at 127.9%, that denotes roughly 8% daily movements, right? So each day, as long as IV stays this high, we should see at least 8% movements daily, right? Now, for next Friday, December 11th option expiration, we can see that the expected move is around $4 in either direction. So upside would be around $26.50, downside would be around $18.50. Now, I know a lot of you are eager to get into the stock right now, given that it ran up so fast last week, and a lot of people felt they missed the stock run up. But a great strategy to use, given the elevated volatility, if you want to own the stock, is to sell cash secured puts. Now, my suggestion would be to go out to the December 18th monthly OPEX, which is two and a half weeks away roughly, 16 days till expiration. And you can sell the 19 strike puts for that date for around 85 cents, which means that you'd own the stock at about $18.15, which isn't that bad at all because it was trading around $15 and change prior to their earning report, right? Now, if you do wanted to play upside and think it's going to push back up again, obviously I would recommend using call spreads because the elevated volatility is just too rich to buy straight calls, and buying straight calls is not the best way to trade the stock, right? So if you're bullish into December 18th, for example, and you want to play the upside, a better strategy would be to perhaps buy the 22 strike calls at the money roughly, right? And sell the 27 strike calls. So you form a 5 wide spread and you're paying roughly $1.45. So you're risking $1.45 to make $3.55, right? Risk reward is pretty favorable. Your break even is $23.45, again, because you combine the debit amount with the strike price of the long side. So 22 plus 145, 23.45, right? Obviously, playing put side is limited upside because it's a cheap stock already as is. So I won't really suggest playing the put side, but the cash secured puts are great if you want to own the stock at a cheaper price. Obviously, if you go to January, there's even more premium to be had, and you can even get the stock for 17 less 25 cents or 125 means you own it at 15.75, right? Again, pretty good entry point overall, right? So just a few ideas to think about as you're trading the stock. This Friday, I do expect a nice movement into the Friday OPEX, and I'll probably be playing some straddles into that event, right? So if you have any questions at all or comments, please put them below and I'll answer them as soon as I can. And if you like the video, share it and subscribe, please. And yeah, I'll speak to you guys soon. Take care and bye for now.